Hello, everybody. We're back. I'm Tom Sosnoff. He's still in Ratigan. This is Truth or Skepticism. Mr. Ratigan, how are you?
I'm very good. I hope you survived your celebration of America's independence. Did you partake in the celebration?
I barbecued.
Okay, that counts. That fully counts. That's full credit for a barbecue.
I did some hardcore barbecue chicken, and I made a what do you call those steaks? With the big bones, tomahawk.
Oh yeah, those are very rewarding. They're fun to work with. It's like you get to be like Bam Bam.
Yeah.
It's really delicious.
The main thing about buying that is you get to cut it off the bone, and then slice it up. I got it down.
It's like a dinosaur steak.
Yeah.
It's tasty.
Yeah, and then everybody complains.
Okay, so yeah, you get full. You get a 10 out of 10. Now, are you a sovereigntist? Are you based America's in like? Do you find yourself like? Are you a globalist or are you a nationalist? And when you think of it, you can see I'm trying to set you up here. But anyway,
I'm not sure what that means. You mean do I like my steak rare or medium? Is that the question?
No. I mean, like, do you feel that the world is connected or disconnected? And now, do you feel connected to the world on the day of independence, or do you feel more separate from the world?
Boy, I don't know. I never really thought of that. I'm strangely very American, because sometimes I feel like I'm too anti everything, or I'm too liberal to be. But then the other times, but then I feel like I'm pretty hardcore free market, capitalist. USA. Yeah, I'm hardcore democracy guy.
Yeah. And so when you look at things like the trade war with China and the chips and these things where it's like, and they're playing the cat and mouse, and I call it hide the pickle. They're playing hide the pickle, and they're like, you got to pay this and you got to do this, and then the backdoor deal of this. The most, and anytime there's a sanction or a tariff or a trade intervention, there's always a game of hide the pickle.
Yeah, sure.
Right? It's Russian oil moving around the corner back through the different flags and through India, or, as long as there's time. Which I would argue is evidence of the Sosnoffian advocacy of, both positive drift and flow of capital, where it doesn't matter what your tariffs are, what you can try to, cut off the supply of something or another, and it'll work for a minute, but that the markets, not just the financial markets, but the literal supply chain markets, will always find a way to supply the things that the market wants to buy, including whether it's chips or Russian diesel oil refined from India. In other words, it brings up the idea of I'm entertaining the foolishness of trying to stop the flow.
Nobody can ever stop the flow. Greed, and marketplace efficiency trump the idiocy of traditional media. There's nothing.
Traditional media. I'm talking about politicians saying you can't get Russian oil. Well, then we'll just take the boat offshore in Dubai and run a new beacon on it, and
politicians. The political rhetoric is just another form of PR, because politicians, in order to get paid, in order to get reelected, need to hear themselves talk. So,
but it's not because if you're Daimler-Benz buying diesel from India at 3 times the price that you were buying it from Russia, but it's the same refined Russian oil and it's the same flow, and the only thing that's changed is a law from Brussels in the United States has been put in place that makes you Daimler or you Volkswagen pay 3 times per liter of diesel because of the perceived risk of future supply shocks, which is non-existent because the oil is being sold from Russia to diesel refiners in India and then shipped back to you in Germany. There is no supply shock. I've tripled the price. that to me is political malfeasance.
Yeah, that would be an example of it. I just don't believe it really exists that much, and I think that's just an outrageous example. I just don't believe that there are that many. Like if you go around right now,
you don't think there's gouging for sanctions bypass deals?
Of course there are for certain places that are insignificant in the food chain. But for the most part, if you went around and you priced everything globally right now, you basically end up with, do you know the price of a liter of gas was the same in Morocco as it was in Spain, as it was in the UK, and as a ratio as it was in the US? There's nothing different.
Okay,
everything's the same.
But again, but that's a rabbit hole. I'm not.
I understand, but I'm just saying.
It's a hill I'm not going to die on.
You're using an extreme example, which I don't.
I got it. Okay, I understood. I heard you. Now come with me to the big hill. U.S.-China semiconductor industry.
Sure.
It's not some backwater
Nope.
Indian diesel deal.
Nope.
For a 3-month markup last winter for the boys in Frankfurt. Okay. I'll accept that you've got that. Sure. That's an aberration. It's not it's the exception. It's not the rule. Uncontested. At the same time, we're off to the races here for the bajillionth time in China at a moment when you have a positive drift for sure. Okay. Creative force. Everybody's engaging. You also have hyper concentration of wealth. I don't mean this in the political sense of like, oh, why does Elon Musk have all the money?
I understand.
I mean in the sense of like, if there's a good idea in the financial markets, all the money will go to it. Like this, Apple, Tesla, whoever has NVIDIA is the best example ever, where it can go from nothing to something, and then it can go from something back to nothing. If the efficiency of the technology allows remarkable or I'll just say concentration. Who am I to say if it's over? Hyper concentration and movement away. Is there any relevance even to forget the good or bad? It's obviously disrupted, not great. Is there any relevance to the political interventions in the chip market, whether it's China cuts off this or U.S. cuts off that, or ultimately will the flow of chips be the same no matter what? And it'll just a matter of sort of who's, which jurisdictions and maybe some delays, but ultimately, if fool's errand, basically, is the risk of a China-U.S. disintermediation on something fundamental like chips a preposterous risk?
Yes.
Okay, I agree with you. I like this.
Yes, it's a preposterous.
So then, is there a trading opportunity now because there's a perception? Come on.
No, the only you can argue that on a relative basis, China and Taiwan are slightly discounted versus the U.S. That's the only argument you can make, and there is enough. There's enough history on the side of suggesting that discount is like an ARB discount that is warranted. It raises the level of opportunity, and it also reflects the additional risk. But is there a situation that any of these companies are truly at risk other than the fact that they're producing something that can be produced by other people? No. Like, in other words, I don't.
You don't perceive any price distortions or even elevated volatility because of the saber rattling, the political rhetoric, and even some of the tariffing, and there's a little hide the pickle going on with
exactly. It's called what we call it's a lack of other news stories more than anything else.
July 4th. You're saying it's just July 4th.
It's exactly.
So then it's appropriate to play a little hide the pickle on July 4th. Goes with the barbecue.
Sure. It's so funny the saber rattling, as you call it, or whatever. We just call it in the trading world. We just call it noise. But it's interesting because the market actually loves noise. It's the same thing as PR and marketing. What they've been able to do is without they've had their story validated by third party. So what's happened by third-party media? So what's happened in the process is that all the noise relative to, China, Taiwan, the U.S. semiconductor business, all that, has just generated about another, $500 billion in market cap for these companies because it's kept them on the front page of everything for so long. So because
they're in that Class A existential industry list, like shipping and energy and banking.
Exactly.
Semiconductors gets to stay on the A list in terms of the major industry.
They get the best shelf space. They literally have the best. It's between them and AI shooting for the best shelf space, and when you think about it, it's shelf space is just perception. And the firms that have been able to maintain, that visibility, and in the world of just big companies, I mean, Tesla's been able to do it, as well as, and Musk's been able to do as well as anybody. Bad PR in Twitter means more people buy Tesla. I know it sounds crazy, but that's the nature of the world we're in right now. So yeah, I mean, more saber rattling, more talk of China doing this, China doing that, Taiwan doing this, U.S.
Basically, that whole heater, as far as you're concerned, is just basically support for the chip stocks.
Of course,
however you want to slice it.
Of course. Noise equals interest. There's nothing else. There's nobody that's fundamentally a short seller. So noise just equals buyers.
And yet you say, as far as chips are concerned, not really much there for you. Maybe an arb on the discounted China, Taiwan versus U.S. chip companies, but otherwise not as interesting as we might like relative to either NVIDIA or Tesla, Meta, Apple.
I don't know why anybody would find that space interesting now, other than the absolute massive amount of liquidity, so you can do whatever it is that you want to do. But the massive amount of liquidity is, for traders, makes it interesting. Beyond that, I don't know what's there. I mean, unless you want some market that's beyond fully priced,
How closely attached is it to AI, which obviously is the number one sell space? In other words, my perception is that the entire chip situation is AI driven because it's that between COVID and the chips for the cars, Tesla, Toyota, whatever, the sort of transport, the aviation and automotive, we'll say, plus AI, that those three things are like existential on chips.
Yeah.
From where
I think it's incredibly interesting how they have maintained this level of noise and thus this crazy amount of buying all across the board. I don't get it, but I don't understand.
Like Sun Microsystems 30 years ago, where there's the perception where it's like don't mine for the gold, buy Levi Strauss.
I don't think so, because I think at the time there was so much less capital chasing Sun Microsystems than there is chasing NVIDIA. So I don't think it's the same thing. It's probably 10x of what it was then today. But I think the emotions behind it, what causes people to, the speculative fever, and what causes people to jump in and do all the crazy stuff they're doing and buying all the crazy stuff they're buying at the levels they're buying it at. Is this a little bit like cannabis was when the cannabis stocks opened? Sure. Is this a little bit like the EV stocks when all the EV stocks went to the moon initially? And the answer is, of course. These stocks like AI, which is up, I don't know, $2 or $3 today, NVIDIA. I mean, all these stocks are going to be sharply lower. You can't just bet on when. I don't know when.
But I'm assuming, obviously, you're in the back of your mind, in addition to the NVIDIA chart, you have a image of your mind of Tesla's behavior in recent weeks. I mean, in terms of your gravity, Tesla's at 280 or something now. They're dancing with 300. It's ridiculous.
It actually sold off a little. It was up earlier. It's down now a few pennies. It's 280. But Tesla is another crazy interesting stock, because Elon has done a few things that, as insane as he is, he has done a few really interesting things. One thing is that he has he's distracted investors in a non-intentional but absolutely brilliant way. He's distracted investors through his purchase of Twitter to keep his name on the front page of everything, to keep him out front and center as this whatever he wants to be. And in the same time, he's kept everybody away from asking any questions about Tesla. And yet, so you can't trade Twitter, so you end up watching Twitter and buying Tesla. It's freaking brilliant.
Tesla trades like a Twitter derivative, partially.
But he
partially.
doesn't. But he didn't do it intentionally. It's just the way this all played out.
I got.
The other thing that happened for Elon and for Tesla was at the same point in time, he created. He created an incredible buzz. Like he put himself in a position, and you can't, there's no denying how amazing this is, but he put himself in a position where basically, for the longest period of time, most of his competitors would have rather cut their toes off, than do a deal with him, help him one bit. And now they're making deals with him out of necessity. So he's basically, he's
shifted the leverage to his side on the charger network and all this.
Every single thing. It's pretty
a different meeting than it was 5 years ago for him.
Well, when you think about the size of the automobile industry, and you think about the amount of money committed to that industry, and you think about where Ford, where GM, where Toyota, where all these companies are trading, where they have traded, Volkswagen, BMW, whatever it is. When you think of everybody that's out there, and then you think how he's destroyed but how he's blown away the entire industry that's centuries old, and it blows your mind.
Blows your mind.
Your mind.
I can't. That is, but the other is that what's happened?
Yeah,
you're saying
there's no denying it.
That the jig is up. That the leverage is shifted from the incumbent to the provocateur. Yeah. The provocateur controls the board.
Yeah.
Now you serve at his leisure now, not at the incumbent's leisure.
Yeah. He absolutely owns the space, and when I say he owns the space, he owns the automotive space. He owns it. He can take anybody out, but why does he want to? He doesn't need to.
Which leads you then, when you look at a Tesla stock, which then is trading not on a traditional automotive basis, like, how many Ford Rangers are they going to sell this quarter?
No, they don't care about that.
Trading based on what you're talking about, which is the sector dominance, we'll call it, industries, pan sector, full spectrum industry dominance.
Revolutionized everything technology-wise.
Which leaves the stock price basically a pile of implied volatility.
I was with somebody the other day who's in the private equity business, and he asked me, he said, what's your position on in Tesla? I go, I'm pretty flat here. I'm a little bit short. I got a bunch of positions on. I'm probably short a few deltas. I go, why? Why are you asking? He goes, we're all in. He goes, we think it's going up 5x from here. I go, 5x from 280? And he's like, yep. I'm like, all right.
On sector dominance and the wild man.
Yeah. And I'm like, okay, good luck. But I'm just saying the
well, what's your actual trading posture? Is it one of I don't know, or one that is I do? You have a bias one way or the other. Direction.
It's hard for me because I'm confused. I kind of I try so hard to like Elon, but I just don't like him. But then at the same time, I drive a Tesla.
I mean, that's a big tell, because I used to hate Steve Jobs, but then I started using a Mac.
I never hated Steve Jobs. I never used a Mac, but I cannot imagine myself without my Tesla.
Yeah. But which is a different question, which is how are you trading the stock?
I'm a premium seller, so I'm short.
You're just short implied volatility with as little directional risk as possible.
Yeah, I'm basically short a lot of 280 straddles right here.
much as you can be. You're just like, listen.
I mean, as much as I can be.
You're like, at the very least, the pot odds are I can't keep moving like this. Whatever it's going to do, more of this can't keep happening statistically.
Yes, that's what I'm hoping for.
That's your posture.
Yeah.
You see Coinbase as well, not to go full stock talk with you here today, but Coinbase also had we talked about it a couple of weeks ago.
But I've been bullish.
Crypto fear.
I've been
I know you have, but this is a pat on the back. I remember, 2 or 3 weeks ago, you were talking about Gensler and the crypto lawsuits, and there was a moment of extreme, headline hostility. And Coinbase, whatever it is, I don't know if it's the last 5 days or 10 days or something, but recently, and obviously not just Coinbase,
ever since the SEC filed their case against Coinbase and it opened at $50, it's now $80. So it's up $30. It's a crazy move. It's up 50%. I'm aware. Since the SEC filed their case, over 50%. I mean, it's a joke. Noise, market noise is a joke. It sounds
like a bunch of different jokes in here. But
that's what market noise is. That's what people get confused. Everybody gets confused by this stuff.
Meaning, the reason that trading is a business and that it's profitable is because markets do have noise, which is extreme volatility like this,
which creates some very short-term emotional, price opportunities. I'm not going to call them inefficiencies because they're not really inefficiencies. They're just price opportunities that from time to time get created based on the noise around.
That sounds like very questionable.
Based on the noise.
That sounded like a real that's like a kid at the candy store. He's like, listen, I'm not calling this candy. I'm just calling this a sweet chocolate item that I'm going to enjoy. It's not a market inefficiency. It's just a market buying opportunity.
Well, I don't believe in market inefficiencies, but I do believe in opportunities. And
you believe in extremities, that extremities are opportunities.
I do believe in markets go to extremes. I mean, anytime when there's money involved, the markets will take things to an extreme. But I think Tesla is, I made my first Tesla short, I'll remember it like it was yesterday, at $32. And I thought it was, there's no chance Tesla goes over $32.
No way.
I think the split adjusted price today is probably like 8,000, whatever it is, who knows? I sold it at 32. So, I mean, obviously I didn't hold it that long, but that's where I realized, all right, I'm in a little bit of trouble. I sold at 32, I sold at 50, I sold at 72.
Have you ever made money just nakedly long Tesla, like your buddy who's just all in for a 5X, just going to ride the tide?
No, never. But I don't make money all in on anything, ever. I mean, it's really rare for me.
Why is, in other words, you say noise, going back to the crypto, binary, 1 to 0 bet on, the crypto in the US over the next 12 to 24 months, getting strangled and going away, or expanding or consolidating, between all the vectors.
You mean the whole space in general?
Yeah. Well, is Coinbase going to have more business? Tasty crypto? Is there going to be a lot of Bitcoin, a lot of Ethereum? Do you feel like the government ultimately will find a path, create a path? Or you're an optimist. I'm an optimist. I'm curious what your sentiment is after some of the recent activities.
Well, my sentiments never change. It's not going to. Crypto is a technology that's going to. It's too important and too valuable, and it's going to expand. It's going to need a couple things that are going to have to happen over the course of the next, the next, however, I don't know, 6 months, a year and a half. The crypto, the various blockchains are going to have to get with the program, which means they're going to have to take. Even if you're a technology company, like we're a technology company, but we're forced to get into battle with the regulators. It's our job. Our job is to protect is to do everything we can to facilitate opportunity for our customers. That means we have to go to war with the regulators on every freaking level, because that's what brokerage firms do. They go to war with regulators because to make
and not just Tasty, but every broker to one degree or another.
Everyone that's not gutless. There are a bunch of firms that are gutless and that make me sick. But there are other firms, Coinbase being one of them, that's not afraid to go toe-to-toe with the regulators. Tasty's not afraid to go toe-to-toe with the regulators. And we do that because it's our job. We view it as our role. We're an advocate for the retail investor. And these blockchains and these technologists who are brilliant people who have invented something and created something that is off the charts with just all the opportunity there, they refused to get in the trenches to fight it out to protect their product. They want us to do it for them. We don't make any money doing this.
Meaning that the people that are the main owners of the actual coins, you're saying, provide no resources, like the actual Ethereum people or the Bitcoin people or whatever they are.
Or everybody else, the people from Solana, Cardano, Polkadot, whatever it is. They don't finance advocacy for their stuff. You're saying they don't pay a law. They won't run a law firm. Well, because their argument is, listen, it's not our job. We build technology. It's not our job to worry about the speculative side to this. We don't buy and sell it. We just build it. And the reality is that you need a very deep pool of liquidity in order to have a viable product. And we're going to need the support of a lot of these blockchains to support and explain their own technology to the regulators and to everybody else, so that we can take all this stuff mainstream. It's a little bit difficult ask for brokerage firms and for exchanges to handle that on their own, because it's not even our technology. So
to go to the mat for something that's a new product that may not even actually become a meaningful part.
Exactly. And for something we make $1 on, we pay $10 in fines. I mean, it's stupid. So we need these guys to step up, and we need them to stand behind their technology and make a case for, hey, this is a global game changer.
Mm-hmm. And do you view that as existential or simply just helpful in the short term?
Well, I think that everybody's approached it wrong. I think there is an argument to be made that the way you get around the regulatory problems is you basically explain to the regulators that because this is new technology and because it has the ability to improve the customer experience and to reduce the customer expenses relative to traditional finance and banking, that it is beneficial to the consumer, so it's something that you should be behind. In other words, if I'm a consumer and I want to move money, rather than use an international bank, why can't I use digital assets and pay 1/1000th of the fees? That has to be better for me as a consumer. So why are you stopping me from doing that? That's my issue.
No, I get. I understand. I was just having a moment, pause to think about the misaligned interest where the people that are forced to pay the lawyers, whether it's Coinbase or Tasty or whoever else is willing to endure that. That it could be existential for some of those coins, I guess. That's obviously probably not for Bitcoin or Ethereum, but for some of those additional things, if they don't step up to defend themselves, I would just think that there's a point where a third-party broker advocate, whether it's Tom and Tasty or whoever else, they're going to be like, the hell with it. It's not worth. Let's just stick to we'll do Tether and Ether and Bitcoin and forget it. Like that, you got, I don't know. It's.
Yeah, I don't know either, but I just think that, we're at that point where the opportunity is too great to say, it doesn't matter, because it does matter.
But it also seems optimistic insofar as Coinbase's stock is a reflection of renewed interest, that certainly, and Bitcoin's price and all the things. I mean, I think it's the best performing asset. It's better than Tesla this year, right? Like there's some, it's obviously from a huge low, but there's been movement there in a positive way, which at the very least will create activation in the crypto markets outside the United States.
Yeah, and when you look at
that's for sure.
And when you look at like access to technology in other places around the world, it is very hard to make an argument in 2023 that you're better off investing in the Russian stock market or the Chinese stock market directly or the Japanese stock market directly, as opposed to some form of potentially some digital assets that are
security token of some kind that's traded in the token market.
That's
wherever
right.
That
in the decentralized
crypto or whatever.
I would much rather be in the decentralized world than in the centralized world of a place I can't control any aspect of it. The buys, the sells, the clearing, the execution, the data, anything. Like, it's ridiculous. I mean, I'm like, but I'm preaching to just screaming at the moon. It doesn't matter.
Right. Well, but it means there's growth outside of the United States. Probably more than there should be.
Yeah. There is
right.
growth.
In terms of that, it's sort of the same way that the Russian sanctions mean that Indians can make oil. The U.S. sanctions on crypto create more opportunity in London and Berlin and all that jazz.
Which is happening right now too. That's happening
as we speak, and obviously Singapore.
Yep.
Anyway, speaking of money moving around, there was Tony was sending me messages complaining about the quality of your appearance on CNBC recently about the IPO market. He was, and I didn't realize that you had made that appearance, and so. Do you view any activity there as evidence of health in the private markets, or is it entirely a function of aversion to debt financing is more expensive, and so a bad equity deal at 0% looks like a good equity deal at 5%, kind of a thing?
I'm actually surprised that the IPO market is not significantly more heated than it actually is. One, because of the cost of debt financing is so ridiculous now relative to where it was. And the IPO market is so dead now relative to where it was that the inversion makes no sense. The only thing I can equate it to is to suggest something that I've argued all along, which is that investment banks are so fundamentally stupid and ill-prepared to understand market environments that they promote things when they all promote things together, and they run scared from things when everybody else runs scared. In other words, nobody wants to bring anybody public because nobody else is going public. And when everybody's going public, everybody wants to bring everybody public. So I don't understand, in a period when it is the most advantageous time in the last 2 decades to bring a company public. We're in a bull market. There's an incredible amount of money out there. There's unbelievable demand for new issues, and yet nobody's going public. The only reason I can think of is that investment houses and investment banks are just too stupid to recognize that. There is no other explanation. There is no other explanation. And you're going to say,
but the other explanation would be there have been 10 years of private company markups by the Sequoias and the whatevers of the world, to the point where, because they've done private Series C, D, late stage raises at such big valuations, that the late stage private investors are much more hesitant to deal with a public market valuation, because they jacked the monkey so hard going on the back end.
Yeah.
It's not like it used to be where, $500 million for the
there's
company.
no question that they've overpaid, so their value, they may be underwater, but very few private equity companies have a majority share. Most of them have, on average 20-25%.
But they typically have a governance provision that helps them in this situation.
Ooh, that's
depends on the deal, but they like to pick up the.
Yeah, there could be some hooks on the back end, but I'm not accepting the fact that there's just no great companies out there that have an opportunity to go public. I'm not accepting it. It has to be that the investment banking world is just so far behind, and they can't promote things on their own, so they have to do it as a group. So the whole industry has to be in, or nobody's in. That's the only thing I can think of.
And well, what about also it takes lead time? So let's say they all agree with you, and they're like, okay, we agree. Okay. It's going to take another 6 to 12 months now to get everything spun through the spinner. So you won't really see deals start flying until April of 24, even if everybody today said yes.
Yeah, I mean that there's some truth to that. I also think that there has been, the only other explanation is that there is just, what the SPAC marketplace did to the confidence of, some really good young founders and some really smart people who thought that, oh man, we really have a great company, and the fact that somebody's going to give us $2 billion for a company that's worth $200 million is just they have the foresight to see what we're really worth, and the truth was that it was only worth $200 million. So the stocks are down by 90%.
And so there's a huge hangover after the SPAC boom of all those busted trusts and all the founders who got jammed for 20 and 30 and 40% fees for fundraisings where 95% of the money was redeemed.
Believe me, the SPAC companies they lost all their money.
Yeah, no, I mean, remember, because I was on the board at Hotel Planner, and the best thing that happened was that still never happened. Yeah. Because if you looked at the final fee structure on that deal and the value of the whole thing, it was the thing that it was not good for was the company. It may have been good for the banker or for the lawyer or for the whoever. Terrible for the companies. But I think that has it. I think there's a little bit of an emotional burn mark from that. That has. That's why I think next year you'll get some old school, like IPOs, like the old days.
Yeah. I agree. I agree. We need them too. We're losing companies. We're losing trading vehicles, and we need more, not less. That's why we need more cryptocurrencies. That's why we need more companies to go public. That's why we need more new products. We need everything. We don't want to lose anything. We want to add additive. All
does the phenomenon of the Me Too, the copycat phenomenon, and the hyper concentration phenomenon actually deprive other worlds of money? In other words, because everybody's so wrapped around NVIDIA or Tesla or whoever the tower of money is in the market, or there's whatever, 4 or 5 of them. Does that hurt other parts of the market?
Yeah, I mean,
everybody's like. I
mean, I think everybody would argue that this market has been so concentrated that there's been no trickle down to the Russell, and there's been no trickle down to the Dow. I mean, everything has been all the monies, everything has been flowing into the top, 10 stocks.
And I'm just thinking that that's a reason for the IPO market weakness, right? If I have money and I can put more money after Tesla or NVIDIA or Amazon, or I can noodle around with some, any company that's riskier, that's going to be perceived riskier.
Yeah, but people don't buy a lot of IPO stocks, so it's like the deals are relatively small. I don't think that's the case. They might put an extra $50 or $100 billion into Tesla, but the IPO market's a few hundred million. We're not talking about. I don't think it's apples to apples.
Do you think the IPO moved to crypto security tokens? Forget the SPACs, forget the old school 7% at Goldman or.
I think it easily could. I hope it does.
Straight security token offerings?
Yeah.
With some sort of, how do you reconcile the theoretical diligence process, all that roadshow work of the pitching and the decks and the slides? You do that as a security token, like a virtual data room and a presentation kind of a jazz, like you just do it?
Well, I'm not sure how that stuff worked anyway after all the SPAC moves and everything else. So I don't know if that's. Yeah, so I don't know if that's that big a deal anymore.
So you're saying, whatever you're saying, legitimacy by any means, and if the investors believe you're legitimate,
the more participants, the more legitimacy. So the more hands that you can get in, the more distribution you can get with any kind of an offering, the better off you're going to be. And therefore, I can't picture that unfolding any other way. I think it's got to be good. More people.
But if your metric would be, a dollar's the wrong number, but you'd rather see XYZ Co. have $1 from the right 10 people than $10 from someone you don't know.
I mean, I think most people think of it that way. At me, as somebody that raises capital for like our own ideas, our own businesses, I don't really give a crap where the money comes from.
Okay.
Like I always said that people go, well, this guy'd be a great investor for you because this fund, they could really help you. They could add all this technical support. They could add all this know-how and this something else. I go, you know what they're going to add for me? Headaches. I'd rather just give me somebody that promises they're never going to say a word to me. I'll take that person every time. And give me the person that gets me to my number, and I don't really give a crap. Like, I don't care who the investors are, because it's my job to go out and make them money. And anything they do, say, try to help with whatever, it's not going to be of any help whatsoever. I've learned that. They're completely useless.
But as a referral in the security token market, it will be used as a significant referral.
All right, whatever. Yeah.
It's the same way you told the story about Party Boy bought into something, so you bought into something, and he bought into it because you. But it even doesn't mean it's correct, but it's human nature. Or the Sequoia reference at FTX. I mean, diligence is the easiest way to get into a deal without doing any work, is to find someone who you think did the work, which is basically what everybody does with the Sequoia references and all, whatever, Blackstone or whoever they think did diligence.
Yeah, I mean, listen, it's an age-old argument. We've been going back and forth on that forever.
Sure.
Yeah.
Well, I actually think that I'm now, because things were so good in London, honestly, which I really was remarkable, the intensity of that crowd. I say, you know what? The hell with them. That's what I say.
The hell with who?
If the Americans don't want the crypto and the fun stuff, we'll take it over there. We'll take it to Antwerp and London, and they want it and they can have it. Well, I just think that there's a world of tasty traders.
Yeah.
That are not, that whether it's any specific product, I don't know, but they are ready to go.
Somebody should pounce. I thought they were trying to do it in London, but I don't know where it's ultimately going to happen. But the U.S. has always done a good job throughout the years understanding the importance of, market structure and free market, capital availability and that kind of stuff. If some other country stepped up right now to be dedicated to be like kind of the decentralized, home, and everybody could be essentially, run their regulatory requirements out of there, they could dominate that space and create, I would think, trillions of dollars in revenue over the next, couple of decades. I don't understand why somebody's not doing it.
Well, I feel like both Singapore has attempted it in different ways, and then obviously El Salvador in a bizarre way.
Yeah, but El Salvador doesn't have the credibility, and Singapore honestly is a little bit. Singapore has a lot more credibility, but they're also really small. And Singapore, the regulatory environment is loaded up with bureaucracy and red tape and way behind the times.
Well, London is the obvious bullseye because it's Anglo contract, all
absolutely,
the same,
but also with a ton of bureaucracy and really inefficient regulators.
No, yeah, and it's no better in Brussels, I'm sure. I mean, you're dealing with.
It's no better
with people, sir.
Yeah, no better anywhere in Europe, but somebody should take take the lead. Somebody should go carte blanche, take the lead, and just hey, we own this space.
Set a global standard, like the Bretton Woods or like LIBOR. This is the standard for crypto contracts and security, and then everybody be like, yeah, no, we use the shortage standard.
Yeah. That's what should happen, but it's not going to. But that's what should happen.
Well, why don't we do it? You can do it. We'll go over. There's all those people over there. London's loaded with people. We'll create the shortage standard.
I got my hands full. I got to build a toast store. I got to do this. I got to do that. I got stuff to do. I'm Tom Sosnoff. He's Dylan Ratigan. This is Truth or Skepticism. We do this every Wednesday at 1 p.m. Hopefully, we'll have some interesting, topics next week when we I feel like next week we get back. This is like a weird short week. Like I can't remember a Wednesday to Friday week, but next week we get back into the kind of the full market type stuff, and I think it's going to be different.
Are you telling me you're still hanging? It's like we brought you in from the Palapa. The July 4th Palapa. You're like, okay, we'll talk.
I always wanted to have a Palapa. Tony has a Palapa. I
feel like you're a good Palapa guy. I can see you.
I'd be a good Palapa guy. I don't have a Palapa because I live in the city, but Tony has a Palapa, and I feel jealous.
I feel like the Palapa would fit you well. It's like very suitable for your down.
Yeah, I'm a good.
If you're not working, you're over at the Palapa.
I'm a good beach Palapa guy.
Yeah, that's what I'm thinking.
Yeah. Anyway, we'll see you next Wednesday, Dylan. Thanks.
All right, thank you.